Good morning. It is February 13th, the Monday after the Super Bowl. Hopefully your favorite team won. But today we're going to be talking about quality, and I think we saw a quality game yesterday. Quality is a factor that tends to outperform over time, especially when recessions are in the cards. And here I'm going to show you a chart from Bernstein. So I'm going to start there first that maps quality at a reasonable price. You can see this is the top quality quintile. That kind of lighter blue. And then you've got quality at a reasonable price, and then the benchmark, which is this aqua. So quality is always outperforming. And this is in the European area. It's very similar in the States. But as we know, last year in value was the winner due to rising rates, which usually don't coincide with expected slowdowns. So if you're doing the work to be ready to invest in inflation peaking storyline, then reasonably priced quality should be on your radar. High quality stocks have outperformed low ones by 10.8% annualized when the OECD leading indicator flags a recession like it is now. But since the end of 2021, you probably know that high quality stocks underperformed the market by about 9%, although ones with better valuations tended to do a lot better. They only underperformed by minus 0.9%, so about 90 bips. And while quality at whatever valuation tended to have similar returns as well as fundamentals like ROAC, yields, margins over time, we're really more focused right now on reasonably priced names at this stage. First, because of the recent market run-up, especially today, and second, because the more expensive names tend to have higher duration risk. So if there's any issue with higher for longer with the Fed here in the US or with different central banks around the world, you want to make sure you kind of have that baked in protection and not too much duration in your book. So again, you're going to probably want to wait. You waited for a better entry price if you're going to be having positions with that long duration. So interestingly, Bernstein was out for a note on quality at a reasonable price today, as they call it, which listed the names of their top quintile picks and their model, removing the most expensive ones on a forward PE basis. And in the US and Europe, they point to a rough 8% premium for those names only. So that's not too much of valuation premium relative to history. And they're really not in crowded names either. And quality as defined includes a bunch of factors like ROE, 5-year earnings, sales growth, margins, cash ratios, other traditional type factors. But what I've done today, and I'm going to go over to the Longbow dashboard in a second here, is show you some of the names, not all of the names, and how do they spec out today on the Longbow dashboard. You can take a picture and maybe put these in your tab if you're looking for quality names to be monitoring for better entry prices. So here we go. So here I've populated a few of the names on my morning tab for you. And you can see I've chosen some names across sectors, across the US and the Eurozone, from LVMH, a luxury provider, to Dr. Pepper. So then we're in staples. Here in Diageo and staples, we have energy. Now Visa's in financials. So we've got financials, healthcare, here are a few of them there. CXS, industrials, and I've got some tech. So I'm giving you a pretty good cross-section of names that are scoring high on quality and at reasonable prices. And you can see right now there's only one that's showing oversold. That's Novartis. There was an event today. You can read about that. But I'm more interested here in saying where are they trading. So I'm kind of in the middle of my ranges everywhere. You can do your fundamental due diligence to see if you like any of these names. I'd argue that they're all pretty high quality names that we either are invested in or have invested in before. So I'd agree with their assessment of quality. And then what I like to do, is maybe take a look at the KISS view. So again, this really helps you quickly take a look at things. So short-term momentum, you've got a few here showing bullish. So that's good. So it means that it looks like they're picking up some movement. And then medium term, it's pretty much across the board. And this is what I was telling you, is that a lot of these have not been outperformers relative to value and other things that have popped. So as we see these momentum signals turning, and you get from, call it bearish to neutral, and then neutral to bullish, that's when you tend to see a lot of improvement in the security prices. And same thing here with the trading dynamics. I'd be watching for the low end and the high end. Interestingly, a lot of the high end is kind of collapsing lower. And then the lower end, as you can see, a lot of these are moving higher. So that you have this band narrowing. And so it makes sense a little bit here as vol had come down. You've got these narrowing bands across a lot of the universe here globally. But what you can also see is that over time, these can expand and contract. So they rarely stay narrow for a very long amount of time. And so these could be looking for some sort of breakdown, some kind of direction, which again, kind of paralleling to the rates talk that we've been having here. Tomorrow is the CPI print. People are really worried about, gosh, and then paying really high up for protection as well as call options in the options market around this event. So are their words in the print going to be dovish? Are they going to be bearish in terms of being hawkish? And so we're going to be really watching that, seeing what's going on with the dollar, seeing what's going on with these quality names. So putting all this together, you've got rates, you've got duration, you've got quality. Looking at all of these things and taking a look at your dashboard, you can then say, okay, when are those trends changing? I can see them across a swath of quality names, across different industries, across different geographies, and then to say when the tide has turned, that can be a great entry price. And obviously, you're most looking for it to be below the low end of the trading range, because that gives you the best opportunity to stay, obviously, to come back to the middle or high end of the range in the future. But those are the types of tips I would give you if you're looking to invest in quality, and giving you a few names here to be prepping for the time when either things are going to get more oversold and you can pick them up, or if you see these trends change, and then you can start investing with a little bit more confidence in this trend. That's it for today, and I'll see you back tomorrow.